Hi, on August 2, 2016 Bill 28 was passed in British Columbia, which compose of a vacancy tax and a 15% foreign buyers tax. Almost a year after, Vancouver almost recovered back to its peak of the hot housing market. Like BC, Ontario also passed a 15% foreign buyer taxes on April 20, 2017. What if I were to tell you the Greater Toronto Area won't recover like Vancouver? What if I were to tell you the cooling of Toronto housing market will be much, much longer? Hi, welcome to another segment of A+ Trends. What if I were to tell you in 4 years interest rate will go up by 190 basis point? You might think with Canada household debt at an all-time high, and the cost of borrowing for mortgages drastically increasing, it will crash the housing market. If not, at least it will introduce a cooling period in Canada housing market that haven't been seen in over a decade. The Parliamentary Budget Office, PBO, an organization that provides independent analysis on the state of the nation's finances, the government's estimates and trends in the Canadian economy, recently came out with a report that predicts that by the end of 2021, mortgage interest rate will rise up to 4.8%. Still not convinced? All the big banks already have their forecast report for Canada Bank's overnight rate. The 5 big banks almost unanimously, with the exception of CIBC, anticipate there will be at least 2 more interest rate hikes between now and the end of 2018. TD Bank forecasts by the end of 2021, Bank of Canada overnight rate will be up 175 basis points to 2.5%. Here is a quick summary of overnight rate forecast from the big 5 banks. And that's just part of it, folks. Canada's top banking regulator, OSFI, is taking aim at uninsured mortgages to further cool the already cooling real estate market. OSFI proposed stress tests for all uninsured mortgages that would make the qualifying rate for these mortgages the contract rate plus 2 percentage points. That mean if OSFI's proposal goes through as planned, even high-equity borrowers with a high down payment at 20% and above would qualify for roughly 18% less mortgage. If this stress test proposal does go through in close proximity, with a drastically increasing interest rate, the compounding effect could very much likely lead to another crash in the already cooling housing market. We here at A+ Trends predict if this proposal does go through and adjacent, with rising interest rate, the housing prices could easily fall another 18%. We also predict if these regulations and interest rate hike do become a reality, it will take much, much longer than a year to recover back to the peak of the housing market. Thanks for watching A+ Trends. Please like, comment, share and subscribe for more amazing video.